Forcing trades is going to be the biggest investment mistake made between the next 2 days and maybe as far as the next 2 weeks. And you're going to see a lot of chasing up and down because, in my opinion, I think we can trade in a sideways range here that's fairly sloppy for at least the next couple days, if not about 2 weeks. Specifically on the S&P 500, the SPX, I think personally we can trade in a sloppy, choppy range anywhere between 5,300 and 4,800. As usual here, my lower dead cat bounce level is at 5,073. My higher dead cat bounce level there, of course, at 5,300. And look at even this morning alone, all the buy the dippers this morning, they got wrecked. And I'm not putting anyone down, but if you don't understand and have total confidence in how to invest very short term here, obviously it's more so trading, but if you do not know how to get in and get out, especially getting out if it goes against you, you might just want to sit out the next couple days for as much as the next couple weeks. Of course, I'll keep you all updated. Do you think I'm right? Do you think I'm nuts? Let me know in the comments. On the NASDAQ 100 QQQ, I see that wide, sloppy, choppy sideways range here, anywhere between about $438 at the high and $404 at the low. We still have unconfirmed breakdowns below $438 a share and $425 a share. It would be more bearish if on both the Qs and the S&P 500, if we can begin to confirm some of these breakdowns. I think there's a chance, though, that we might not do it until later on in the month. None of my research tells me that the bear market is over. My research continues to tell me that we can come down on the S&P 500 at least another 10%, if not double the fall that we've already had, if not down another 20%. One of the reasons why I know that the bear market is not over is because even yesterday, my chiropractor, all happy and smiles, says, "John, when can I buy in?" And I looked at him with a very serious face and I said, "Doc, when you hate the stock market with every fiber of your being, that's when you can buy into this stock market." So all in my inbox, my TikTok feed, in my personal life, everybody's asking me when they buy in. That's how I know we are not at max fear. This is not the bottom. Buy the dippers, be very careful. One of the other reasons why this bear market could be so nasty is, in my opinion, only about half the people investing right now were around and investing during 2008, 2009. My generation was around. I was a younger investor, and I'm 48 years old. So really, anybody much younger than about 44, 45 that's in the market now, and that's a lot of people, they don't even remember 08, 09. Now, my parents' generation, of course, is still invested, still in the market. They recall it. But my grandparents' generation, they're not in the market anymore. They are out of the market. So only about half the market even understands and remembers real pain. Half the people in the market right now, in my opinion, don't even understand real pain. And unfortunately, probably most of those people are going to ride the bear market all the way down. This is not investment advice, and if you don't know me, I'm John Crocker, professional investor, proud American, cigar lover, and owner of Crocker Capital, LLC. Speaking of the bear market falling more, I think it's absolutely possible that in a week and a half, 2 weeks from now, when the Q1 2025 earning reports start to come out, and I'm not so much concerned with the rearview mirror, I'm not so much concerned with the company's revenues and sales and profits, I will much more closely be paying attention to the forward guidance. And I think when these earning reports start to come out and the forward guidance starts to come out, I think that could be the catalyst in about another week and a half, 2 weeks, that brings the market down further. Now, FactSet says that their analysts are making larger cuts than average to Q1 2025 earnings per share estimates. That's not good. They're also saying that they're seeing more S&P 500 companies issue negative earnings per share guidance for the first quarter than average. When these earnings start to come out, be very careful. Gold is interesting because I will be watching when that flight to quality trade starts to disappear, when people throw the baby out with the bathwater, when they get so emotional, they just sell everything. And I can't wait for that period of time. So on gold, we do not yet have a confirmed breakdown, at least as of about 2:30 in the afternoon today, below the $3,041 an ounce level. But mark my words, and I've shared this with you for at least the last week or two, when gold really starts to sell off, that's when the market will die. Do you think I'm right? Do you think I'm nuts? Let me know in the comments. Quick check on how all those Vanguard clients are doing because they've been told to stay in the market. Don't sell. Everything will be fine. Hold on, ride the roller coaster. Yep, pretty much like I thought it would be.
This too shall pass. And if you decide to get out now, you're liable to miss some very big gains down the road, even though you're taking a beating for the moment. Getting out now is also not a strategy.
Please be very careful of overtrading here in the immediate term. Please do not ride this bear market down to the bottom. If you need help, click that little red email icon in my bio.